So I'm talking to the CFO of BHP just after their report, and I guess you'd have to say, considering the kind of environment they've been working in, quite an extraordinary performance. Welcome, Peter.
Thanks, Peter. Great to be back.
Okay, so everything seems to be a little bit down except debt, attributable profit, basic earnings per share, the dividend, net operating cash flow, but basic underlying EPS is up. Why don't you give us a CFO type explanation of what's going on here?
Well, I think what's going on here is that, I think the organization, as you say, in the midst of some absolutely unprecedented changes and so on, really stood up. I think the things that we controlled went really well. We reduced our unit cost by 9% across the board in the year, and that is on top of a whole bunch of reductions we've made in previous years. And we produced, again, very strong production results across the board. So those things, you put those things together, we produced $22 billion of EBITDA, and we continue to invest in the company. Put $7.6 billion to work, because we need to look after the future, and we still made $8 billion of free cash flow. So great news out of all of that is that, strong balance sheet right at the bottom of our net debt range, continue to invest in the company, still stacks left over for shareholders. So we declared, again, a nice, good, strong dividend today. It's the third year in a row that we have declared more than $6 billion US cash returns to shareholders out of ordinary dividends. So, really great. I'm super happy with that.
So the dividend's down a little bit. Is that because you're storing up for the uncertain future?
Yeah, I think we were down. The dividend was 65 at the interim, 55 this go. Still, it's almost $3 billion worth of dividends, so it's pretty good. I'd say, look, it is an uncertain world, and COVID is not done by any stretch of the imagination. Surely, it feels like the world has come out of the worst of it. But as we know, you and I live in Victoria, and we know what the impacts of second, third waves and so on, we've got to be a bit, we just got to be cognizant about that. Look, the way our dividend works, every 6 months we start afresh, we make a new decision. And in 6 months' time, we'll know some more. And as I say, I think our track record has been reasonable about getting returns to shareholders. Company's in good shape, and I think we look forward to another strong 6 months.
Okay, so you made the point that your unit costs are down. Talks about the sales that have gone on, compared year on year.
Yeah. So I think we continue to sell everything we produce, and notwithstanding the fact that the rest of the world really struggled when COVID hit home and so on. In particular, the very important markets that we traditionally sell into, which is Japan, Korea, Taiwan, obviously Europe, obviously the US, and so on. And so, but China went in first, but it came out in a rush. So it came in and it was a very steep V. And so, really, I think this has been the story of the last few months, has been weakness in the rest of the world, but real strength in China as they come back out of this thing. And because of the nature of our asset set, which is diversified, very low cost, some of the heavy lifting was done in the last few months by iron ore. And less so with oil prices being down, coal prices and copper and so on. But that's, again, the nature of this thing. It all balances back out to an excellent return, and numbers for shareholders.
Okay. Well, I know this is a hard question, but you're the kind of guy who has to answer this kind of question. The outlook for the price of iron ore been great this year, better than what I think most of us expected.
Totally.
For 2021, are you kind of thinking that China will keep on buying and there'll eventually be a global recovery, therefore the iron ore price remains at good levels?
Yeah, Peter, I think there's two things that have really strengthened the iron ore price over the last few months and so on. The one is obviously China and its huge bounce out of the COVID thing. We think that'll continue to be the case. We will hopefully be able to see a little bit more iron ore demand across the world, because it's not just a China story, from the rest of the world as it comes back to life post-COVID and so on. Probably a little less, probably more impact on coal from that than it is on iron ore. But the other thing that has been driving iron ore has been weakness in the supplier base. Initially, some part of our competitors in Western Australia, our business ran really, really well. But I suppose the real story on the supply side has been the weakness out of Brazil. And that was weakness because of the dam failure in Brumadinho that Vale had. Plus COVID has been a big issue, very big, continues to be a very big issue in Brazil. So you put those things together, meant there was less tons in the market from a very strong competitor, and at the same time demand was getting off. Now, just say demand will probably continue to be strong, but those tons will start to come back into the market from Brazil. And in addition, there's lots of iron ore tons that just pop out of the woodwork from everywhere else because of the strength of the price. So, probably it's going to moderate from here, I'd say.
Okay. On the subject of the China economic recovery, obviously it's not easy for a company to work out what a country is going to do.
Yeah.
But are you expecting the growth to pick up? Because the numbers are still low for China in terms of historical growth numbers. Are you expecting them to ramp up over 2021?
I think, again, Peter, you think about that economy in two parts, I suppose. So you have the investment part and you have the consumption part. Really what has been driving the economy in the recent months has been the investment part. And so you've seen very strong numbers out of construction, some good strong numbers out of manufacturing and machinery and infrastructure, which is another big part of it. As the government puts its dollars to work to stimulate the economy and, of course, invest for the future and so on. The piece that is lagged a little bit in China is the consumption side. Still uncertainty in the minds of the consumer and so on. And so there has to be a little bit of catch up, I think, still from that to continue to rebalance that economy. Look, put that aside. As I say, we continue to be, as we've been for many years, big believers in the ability of the Chinese economy to continue to grow and do. And I think the other thing I'd say also is, you recall in the GFC, they had the similar sort of thing. China came out of that and they just threw everything at it, right? And they had, and they ended up with a whole bunch of investment, which was in their minds, really, it was quite wasteful in certain respects. And this time, I think they've learned the lessons out of that. They've been very explicit about that. And so we think that the money that they have used to stimulate their economy is better placed and is more sustainable, I think.
Your CEO has talked about the company exiting thermal coal. I guess in many ways it's a bit of an advertisement for anyone out there who wants to buy it off.
Absolutely it is.
Yeah, but you're the CFO. Like, how much do you lose, and can you make up that loss in terms of the bottom line?
Honestly, Peter, this is a tiny part of our portfolio. This is 3% of our net asset base. So it really is a rounding error in our business. It is exactly as you say. There is a strategic element to this. This is a commodity we're not really going to put money into, and so given it's such a small thing, let's give it to somebody else to have a crack. Probably better value for shareholders. And you're right. We don't have all the I's dotted and the T's crossed on this one. So probably it is something. We've given ourselves a couple of years to execute, and it's a good advertisement for anybody else who's got a good idea. Why not?
Okay. Well, I know you studied economics because you're a CFO, and I taught economics, but I never taught pandemics 101. when the pandemic hit your company and you had to come up with the game plan, sure, which seemingly has worked in terms of the numbers.
Sure.
How hard was it to make sure you could get all these people, men and women, digging stuff out of the ground, getting it on the trucks or trains, in the boats, and into your customers' warehouses or silos or whatever it might be? How hard was that?
Yeah, I think Peter, there's two elements of it. One was easier, which is how did we think about the balance sheet and as the company in good financial shape and all the rest of it, because we think about downturns from whatever source as a day-to-day thing. We're a resources company. We're used to cycles and we're used to shocks. From whether it's a GFC or it's a pandemic, it doesn't sort of matter. The impact is the same. So that piece was, believe it or not, relatively calm. We had a balance sheet. We knew what was going to happen, and we planned for it, and it coped. The other part was something completely different. Now, how do you get a whole bunch of people to, in the midst of this huge uncertainty in their own lives, because their families are part of this themselves, and you ask people to stand up and say, okay, now this is where we're at, we've got to be this, and I hear the concerns. Well, we're going to keep you safe at work, And we're going to ask a bunch of you, because a bunch of people live interstate, for instance, and we're going to ask you to change your rosters. In fact, we're going to ask you to change where you live for a period of time, so that so we can continue to make the organization continue to function. Our people absolutely responded. We had 1,000 people over the course of a weekend. Recall when they shut the borders and so on, interstate. That sort of came, I wouldn't say out of the blue, but nobody had a lot of notice. And we asked people to relocate. 1,000 people relocated in the course of a weekend interstate to continue to go to work. And you say, well, how does that happen? Well, of course, it's the caliber of the people that we have. But really what it was is that the sense of, okay, this whole country is in this issue, and there are some essential parts of this country that need to work, such as the health system and so on, obvious things like that, but also the resources sector. We are such a big contributor to the economy of this country, to the taxes of this country, to the communities that we work with, and so on. And people said, well, it's like a duty to go and do this. And we had everybody more or less across the world, not just in Australia, have that attitude and come and deliver. And, I'm very proud to work for this company, and I have been for many years, but, at that point, you really know it's something special. It's a big deal. Yeah. So anyway, good for that. Yeah.
Peter, thanks for joining us. I hope you get freed from your lockup situation ASAP.
So do I. Absolutely. Thanks very much for the time. Thanks, Peter.